Hello and welcome to this latest episode of Embedded Finance Unplugged. It's the podcast series from Andaria. I'm your host, Graham Barrett. On this episode, I'm going to be speaking with Kevin McAdam, Director of Cards at Andaria. We'll discuss the role cards play in an embedded finance solution and how they can drive real business growth. Kevin, great to see you and welcome to the podcast.
Thank you. Delighted to be here.
Yeah, well, what we're going to talk about today is cards. We're really going to delve into that side of the embedded finance solution. But let's just go back a step and talk about what are the core solutions across that whole embedded finance solution. Just give us an overview if you can.
Yeah, certainly. I think the first thing is probably, why do people want embedded finance? And it's primarily, they're struggling with costs, they've got cash flow issues, they've got efficiency problems, that sort of thing. So what embedded finance does is it brings a suite of products and services together that really enables them to sort of have a better solution. So the typical core elements would probably be a payment account, an IBAN, and somewhere in there would be a card solution as well. So that would be the very minimum viable proposition, and then you can expand on it with other services.
We're going to start with cards because you quite clearly are Director of Cards at Andaria. So why cards? What specific benefits do they deliver to a business, would you say?
Well, cards have been sort of around for a while, but what they continue to do is they drive awareness, maybe of a brand or a solution. They also achieve retention. Okay, so one of the key things going back to embedded finance is that it's important to retain those customers. Then it's about customer segmentation. So you could literally have a card program that could be set around certain types of individuals or customers. And then you've got things really, I suppose, like the ability to expand the different service offers, how many functionalities on that card. And then probably one of the key things, and that people are using more and more, is about how you monetize the data. So the data becomes really crucial, particularly, when you put those whole elements together of retention, expanding services. So I would say all of those aspects, and it's still a secure financial instrument.
Yeah, sure. Can you just dive down a little bit deeper and give us some examples about how a business could use cards?
Yeah, yes. I mean, there's a whole variety of things that organisations use them for. There can be anything from offering something for the unbanked or underbanked. So looking at very much supporting vulnerable individuals with cards that enable them to use services that they probably might not have been able to have access to. Then cards are developed for loyalty. You've obviously got the payment programs where people have various banking solutions. Then you might have different things around for instance, more and more is they're expanding them into what they call ESG. Okay, so this is environmental, social type elements. So they're building the card out so that it has core functionality on it, but it also has services that appeal to sort of people about how they give something back to society. So it might be whether that be a sustainable facility or something along those lines. So cards can go right across the board, and then you've got right the way through, from sort of vulnerable individuals all the way through to crypto. So, card services is quite a broad church of different types of cards that you can make available.
And these cards can be physical or virtual, I guess, nowadays.
They can, yeah. I mean, physical has the added benefit of that it's creating that brand awareness.
Right.
But more and more people will continue to use virtual, because of it's just how we've gone, I suppose, as a society. You're getting into mobile and what have you. But physical does provide extra benefits when it comes to, getting your message out there, I'd say, really, in terms of brand awareness and the physicality of somebody having a card and using that, it's a strong message.
Yeah, I'm sure. But I guess, as you say, virtual is just becoming so commonplace in everything that we do that's the way cards are going to go more and more.
Yes, I mean, lots of our programs now start off with virtual. It's not unusual for that to be the first part of a program. And then usually once they've got the virtual card sort of established, then they might move into offering physical, and that would be when they're looking to either expand their product range or they're looking to meet a different customer segment.
Yeah.
So what they're doing is they're just trying to drive the most out of that customer base they can, and often the physical card sort of helps that. But you're dead right that it starts off with the virtual card.
And I guess it's all dependent on what a business is trying to get out of its program. I mean, does that differ across sectors as well? That you notice that certain sectors like a certain type of card functionality and different sectors like another one?
Yes, yeah. I mean, different sectors will have different appeal about how they use it. So I suppose I gave the example of, obviously, for local authorities and central government, they will be using the card really just to sort of provide a way of getting money into the hands of individuals. So that for them, that's about, okay, let's provide a service which is controlled, regulated, but still gives access. So that's the first part. But then you go on to other organisations where you're probably providing a banking facility on the card, and that will be sort of like providing access to a whole raft of different payment solutions right the way through to sort of Google Pay and Apple Pay. And then, of course, you've got organisations I referenced earlier on about the environmental element, where they might be offering a card that is actually trying to give something back.
Right.
So they're providing the card as the means to sort of like say, well, look, we'll pay so much towards some sort of environmental thing. And more, I suppose the other thing is cards can also be used for crisis situations. So, we've take the current Libya situation. There's probably somewhere in there could be an element about getting funds into those people quite quickly, and you use it through some sort of crisis card.
Okay, so cards can be quite agile then in that sense. You can implement them quite quickly.
You can, yeah. If you've got your setup, and then it's about how quick you set it up. In terms of developing the solution, what you need. Some of them, the Red Cross and people like that have put cards out there fairly quickly.
Okay.
But you can generally do that. And of course, during sort of like the COVID situation, there was a requirement for to offer some solutions like that.
Yeah. And what about then from a business perspective? Because obviously that's more what you do. How straightforward or complex is it to implement a card program for a business?
Yeah, it can be. It's quite a complex process.
Yeah. Because it seems straightforward, isn't it? Like, here's your cards, right. Away you go. But
yeah, for the customer on the street, they'll look at, here's a card, and I can just take it to an ATM or a point of sale, and away we go. But behind that is quite sort of like as what I refer to it as an orchestration layer, which is basically you've got a card that will have to be on a platform. So you've got a platform, and then what you'll have is a suite of services that make up that card. So the functionality might be, anything from, cross-border payments through to certain banking arrangements. But also within that orchestration layer is all the pieces like the KYC, so know your customer, so the security aspects. So the orchestration layer is made up of all the features that you need to bring that card to life, including the network you're going to run that on. And then it's about obviously you have the platform, but then you also have the user interface into the customer. Right. And you've got to make that as easy to navigate and as seamless as possible, but providing all those sort of services behind it. Yeah. So once you've got that established as a business, then you can be to a certain degree agile about how you then operate in certain markets.
So just to be clear then, so the orchestration layer, as you call it, once that is in place as a business, then you can use that for all of your different clients, or are you kind of building that orchestration layer for every client?
No, the orchestration layer is made up of the principal areas that you need to have as part of the card program. So it'd be anything from in who the scheme is with, the banking arrangements, the KYC, the card manufacturing bureau. Okay. So the personal. So basically, the orchestration layer is all the elements that you have to enable a card program to operate, and that can be, as I said, it can be from quite different ends of the spectrum.
Sure. And so how quickly can you get up a card program up and running? How quickly is that process?
Well, you can. It very much depends on how much functionality you need on that card.
Sure.
So you can get a very simple minimum viable proposition up in you could do that in probably 3 to 4 weeks. But typically, it depends on whether you're having a physical card as well, because obviously with a physical card, you've got to then design the card.
Yeah.
You've got to get approval from the scheme, so it pushes things out. So I suppose it really depends on whether it's a virtual or a physical card, but you can, I would say, probably 4 to 6 weeks, and then if it's a physical card, you're looking much more into about 3 months.
Okay, but still relatively quick. And are there interesting things that you can do with the design of a physical card? I mean, how much scope is there?
Well, there is a whole raft of things that customers or sort of organisations are doing now. They're looking to try and they're always looking to stand out with the card.
Yeah.
But the design at the end of the day is going to have a network on there, so it's either going to have MasterCard or Visa or Discover or somebody like that. So you have to get their approval.
Sure.
So therefore you are going to have some limitations about what you can do, but generally speaking, people have become more and more creative about what they can do with it.
Yeah. And then from a client perspective, I mean, obviously peace of mind is crucial, so the security aspect really comes into it. Tell us a little bit more about how you ensure that, you mentioned KYC, but how important is that security side to your clients?
It's really crucial. It's really important. I mean, we're operating in a regulated industry, so therefore, setting up a card program, is going to be governed by, the regulatory authority. For us, it's either within the UK or in Malta, and we have to follow. We have obligations about how we need to set that up. So. There's a whole raft of security aspects you need to sort of bring into play. So first of all, it's about how do you actually allow a customer to take a card. So that's going to be the whole KYC process. Yeah. And then behind that is how do you then manage the program once it's up and running with the customer. So we have, there's 18 different policy documents that are part of the compliance portfolio, if you wish. And that's anything from sort of anti-money laundering procedures all the way through to sort of making sure that, there's a proper process for maybe you've got a payment scheme or an outsourcing scheme. So you have to have all that set up. Just by that nature, you're putting lots of different aspects together to make sure that the card program is as robust as possible, without it being so restrictive that you can't, you can't provide the service. So a customer might have, or on a scheme, on a card program, you might have a situation where they've got permissions and certain restrictions on the card. So it might be about the amount of value you can take out, or it might be about how often they can take something out from an ATM. So you have those sort of elements. But I would say throughout the whole process, right from taking on board the customer all the way through to managing that customer in terms of transaction monitoring, right the way through to all their payments, it's so embedded into a regulated service that the security's there.
Is that a reason to go down the virtual route rather than the physical route? Are there security? Is it more secure to have a virtual card? Or it makes a difference.
Well, virtual can be probably more secure because just by the very fact it's virtual. Yeah. But again, the physical card has its other benefits. As I said, probably better for the brand awareness. Yeah. So people, will look at how they can use that. I would say, it's all part of whatever you want that card program to be. And as I said, traditionally, what I've seen is clients have sort of looked at virtual cards and then they've expanded into physical cards.
Okay, so it's that stepping stone.
Yes, and it didn't used to always be like that. It used to be physical only, but of course with the digital banking and all that sort of stuff, it's just driven the virtual card option.
Yeah. And how have you personally seen, this whole aspect of card programs evolve? I mean, has it changed a lot since the beginning to where we are now? And how do you imagine it will change in the future?
Yes, I mean, when it started, it was very much driven by a card and then a very simple functionality. That functionality is continuing to expand. I think there's more linking accounts, adding emergency accounts to the product, probably providing different levels of aspects within the card, now lending on the card, whereas before it may not have been done that way. And then so I would say what's happened is that there's more functionality on the card, and also more creative about how they sort of offer the services, really, so to sort of stand out, because it's a very competitive market, so you've got to have something in there that gives a new solution or a new function.
Yeah. And how do you stand out then?
Well, our card programs, we basically are developing solutions that looking at whether that be from an MVP level, so just a minimum viable proposition, to a premium product, and that will be very much driven by the level of functionality you put on that card. But then we stand out also by providing the real backup, in terms of the security, very robust controls on the compliance, and also looking at how can we, in terms of looking at sustainable products and things like that, how can we sort of like work with our card manufacturer to sort of say, well, okay, with clients like cards that are much more sustainable, maybe 100% PVC recyclable, that sort of thing. So that's the other aspect I'd say with cards is that it started off plastic, and now more and more are looking at biodegradable solutions and all that sort of thing as part of the card solution.
Right. And so when you go out to your clients and your prospective clients, within the SME market in particular, what else are they telling you? Clearly security is a big thing, but what other priorities do they have?
I think they're always looking for advice and consultation, really, about how they put that program together. So they're looking for what's the best scheme network we should be using, how do we sort of set up with a processor, that sort of. So first of all, they're really looking for advice about how the card program is set up. Then it's about, well, we have a suite of functionality. What things do they need additional to that? So because they're looking for that competitive edge. But it may be that generally speaking, card programs, fall into sort of very narrow bands in terms of, its payments, its accounts, its, certain functionality around what you might have on the card, how much you can use it and how often you can use it. So I think what we try to do is offer a consultative approach and then help them achieve what they want to achieve, within the confines of what we can actually make it so it doesn't become so bespoke.
Sure. And what are their key objectives, would you say? I mean, is this really about driving business growth and finding new revenue streams? Is this largely what's driving it?
Well, it's revenue, it's retention, it's awareness. They're looking for all of those things, and they're looking to have a solution out there in the marketplace that's going to help them stand out. So what they also expect from their provider is, it's a robust platform, it's a robust organisation behind it in terms of that, it's got good compliance, the platform works, it's efficient, so they're looking for all those aspects. So the card program isn't just about here's a card, it's about making sure that all the elements that bring that card to life are actually operating efficiently, effective, and give the customers a seamless approach.
And from a personal perspective, what are you most excited about in this space in the next year, next couple of years? Which developments are you looking forward to?
I think for me, I'm quite excited by how things will develop on twofold, really. I think one is on where will it go on the crypto aspect, how wide could that be? And then the other thing, I think that something that goes back to when I first started looking at cards, was about trying to how you support vulnerable, so the financially exclusive. And I was quite surprised by, and still surprised, even in this country, how many people are underbanked or unbanked. And I still think that element, could be seriously tackled better. So it'd be nice to sort of try and offer, both ends of the spectrum, really. I think looking to the future, but also still trying to make sure you've got a solution that involves everybody.
Yeah. And from an Andaria perspective, what's your key kind of focus over the next year personally?
Well, I think it's having a really strong card division. It's having a good product solution that has an expansive range of functionality that means we can sort of appeal to, the markets that we want to target. And I suppose as part of our embedded finance solution, we need to be able to, that's a cog in that sort of overall wheel of, different solutions. I want to make sure that what we've got in that card solution is strong enough to support the other elements that make up the embedded finance proposition.
Sure. Well, look, we wish you all the best with it. Thanks so much for guiding us through this kind of crucial aspect, really, of embedded finance. And thank you very much for joining me today, Kevin.
Thank you very much for the opportunity. Really enjoyed it. Thank you.
There are plenty more conversations to explore as part of this Embedded Finance Unplugged podcast series. Please like, follow and subscribe wherever you get your podcasts. And if you've enjoyed this episode, please do give us a positive rating and review. You can find out more about how Andaria is broadening access to digital financial services for businesses around the globe at andaria.com. But for now, thanks for listening and goodbye.